Good morning. It's Merritt with Apteros Trading. November 2nd here. Last DMI that I did for the S&P, I'm pretty sure, was Friday. So let's talk about what happened Friday, and then we'll get to today. So this was the prep that we had here. Had a neutral, quick test on the open, which got above it, little wick and drive. So if that's the type of trade for you, which it certainly met our intraday framework and whatnot, on an aggressive short-term basis, but still, it's a trade to be able to take. Here is where you definitely could have gotten short. You could have gotten this first test here. I like this next one even better. So that was a real possibility for a short. Ultimately, scales and then stop out on that. You could have even tried one here if you wanted. But what do we get there? We get a contextual shift, don't we? So this is the spot to be buying. You could try it back over here. These are definitely more aggressive. But if you love the narrative and you love the tape there, then it's a spot you can go for. We certainly had order flow signals in both of these lows here. Order flow can be that tiebreaker for us as we assess. Do we want to take a slightly compromised idea here? And if you did, you were definitely rewarded with this ramp into the close, right? Ramp capital. So it was a big deal here, just speaking to students for one moment, that these pullbacks, while they were not perfect in terms of intraday framework, where's this market need to pull back to? Did it ever give the proper setups here structurally, longer term? No, right? It didn't. So this market needs to get those pullbacks in, and that trumps the value of perfect intraday framework, right? So this would be considered more like a VWAP trade location, and that's fine. All right, let's go talk about today. All right, not a lot of excitement in the S&P here, but we do have some complications in terms of the analysis read. On one hand, we could see this market kind of going back and forth here. It's certainly rotational in its kind of current state between 4609 and 4594. Okay. Another little. This is a much lesser level. In fact, let's just change the style of it to this. Okay, just to make sure you understand, it's a lesser level. It's just a little intermediate spot. Yesterday's value high really is what we're focused on there. But just something if we need a second chance place to get involved, if we want to get involved between, let's say, a short from up here or a long from down here. Okay. Obviously, breakouts above there, we could go long with that. Continue pressing all-time highs. Break it below here is where you have to be a little bit more careful, right? So we see this is a bullish zone. Definitely not A plus, go all out. This is the place to get long type of spot. That's not what it is. It's more so a reminder to us and to myself that I want to be focused more so on longs if I'm going to get into any core positions and hold anything, as long as we continue to be above 45.85. I'll tell you this though, I think my favorite trade that could set up today would be a break below 45.85 and a real clear target into 45.55 or even 45.45. That would be the most exciting, good intraday opportunity thing that could happen to the ES right now, would be for that to break down and us get that really big risk reward move there. Otherwise, inside of here, nothing's really that exciting. Below this little tertiary level that I included here, it's not really exciting, right? It's just building more value in the same prices we've been in. So a break above here, you then use your trade management system to get you out of that trade profitably. A break below here, this is kind of a dissonant zone. We'd be bearish below 45.93 or 4, and mildly bullish above 45.85. So that's the dissonant zone to be careful in. Otherwise, below there, we love that. Cheers.